Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Cardano's ADA, taking a look at what's been going on most recently and what my expectations are for the price action of ADA. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications and you will stay up to date with everything that we do here at Cheeky Crypto. And if you haven't yet gone and done so, check out the Discord server linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. Let's jump into this one though. So Cardano paired up with USDT. This is actually the 4-hour chart, and Binance is our data source. I wanted to kind of start here, just so that we can kind of review the progress that we've had to the upside. It wasn't that long ago we were talking about the potential swing trade on ADA moving up higher, and you know, although we came down a little bit lower than the original expectations, because I was hoping that we were going to hold this area here at around 27 cents, but we still performed incredibly well. It came up incredibly well, even though it did come down to 23 cents or so on these low ranges briefly before its move upwards. Currently the price is at the point of recording 38.56 cents, and you know, I still think there's room to the upside, a fraction more anyway, but we'll leave that open to see, you know, whether or not Bitcoin's going to move up with us, or whether or not we are going to just start to grind our way back down. Now, why I wanted to start on the 4-hourly chart was to talk about the potential of a WXYXZ when it comes to ADA. Okay, now we have completed a WXY, which is basically a double zigzag. Okay, it's an ABC down, ABC up, ABC down, or more specifically, it's known as a double 3. Now, a zigzag pattern itself is masked as a 5-wave structure, going so 5 in, 5 down, for example, 3 up, 5 more down, and that's an A, B, and C. Now, if I come over to my chart here, we can kind of illustrate this just a little bit. If I remove some of the noise off of here, these areas just here are the ones that I'm talking about. Okay, we've come here with an A wave down. That is broken into a 5-wave structure. Let me make this a little bit bigger so that you guys can see what I'm actually referring to. Okay, this move right in here. So if I were to draw this out as 5 waves, we'd come 1, 2, 3, 4, and 5, right? And we'd end up with this 5-wave structure. This 5-wave structure would be labeled up as an A wave. We then moved up here in this overlapping corrective structure, and then we moved down over here into another 5-wave drop. Okay, a 5, 3, 5 essentially is what it would be. Now I'm just going to roughly draw this up without worrying too much about the sub count, but it's approximately there. So we end up with a 5, 3, 5, and then of course we come up, we cross with this overlap here, so we know that this is actually an end of a structure. We are not going into a trend 5, 3, 5, 3, 5 to the downside, because we can't be doing that with the overlap on this wave 4 and this wave 1. So we know that it's an ABC structure here, or a zigzag pattern here. Then we correct up, and then we come down in another zigzag. Okay, so that basically means we have 2 zigzags, or a double zigzag pattern. Okay, I'm going to remove these 5-wave counts so we can remove those out. Zoom out just a fraction so you can kind of see ABC down, move up, ABC down. Okay, all in all, that there would be a W, X, and Y. However, we haven't yet peaked above this area here on Cardano. Okay, that means that we could still technically be in play for a WXYXZ, which would be WXY. All of this recent move to the upside is X, and then Z down. Okay, and that would basically be a triple zigzag pattern that would be in play. I would expect this to be another A, B, and C structure, or 5, 3, 5 structure to the downside. Okay, now what we're really looking for is we're looking to see where this wave X goes, because it cannot and should not cross more or be larger than 100% of our Y wave. It cannot do that, right? So that would be an invalidation, and we can put it to bed and say, okay, it's just a double zigzag. That double zigzag, though, in itself doesn't necessarily mean we are not going to see corrections and we're not going to revisit those lows. We more than likely are going to be revisiting those lows. We can't move up in straight lines forever. Now, the other things that we talk about on this channel outside of Elliott Wave theory, but by the way, guys, if you're looking for more information on Elliott Wave theory, check out 𝗕𝗘𝗪𝗏𝑐𝑜𝑚, linked in the description below. I've created a 21-part video course on it so you can understand a little bit more detail. Let's jump into the kind of the basics though, and these are say basics, but we have a trend line here. Okay, we're moving up into higher highs, and of course we have a trend line down here at the bottom, and that's higher lows. Okay, now this arguably would have been over here recently, but we broke it and we've come down a little bit lower. lower, right? So if I had drawn it here, we'd be looking, oh, look, we've broken our trend line. We're going down, panic. But in reality, is these trend lines are all weak as anything anyway. The point that I'm trying to make is that we are going up into higher highs and higher lows here with this overlapping structure. This is not a good sign, not from an Elliott wave theory point of view. When we start seeing all these overlaps, we have to think diagonal structures, and considering we've had all this run to the upside here, we'd have to think end of structure, okay, end of structure. So when we start reviewing that, we start thinking, okay, what's likely to happen here? Are we going to push up one more time? Are we going to pull back down? Where is our invalidation on our WXYXZ? Well, that would be right up here at 44 cents. So we know that we've got an upper limit. We don't want to see that necessarily, or we do want to see that kind of get broken, however you want to flip that on yourselves. There would be invalidations on WXYXZ, but doesn't necessarily prevent you from going down. So let's go for a bullish scenario. Let's assume that we're not going to have a WXYXZ and we're not going to go down into new lower lows. Instead, let's go bullish and give us a bullish narrative. If we have already peaked here, where would a natural healthy correction take us to? Well, a nice healthy correction would take us from the low to the high on our fib scale. A nice healthy correction would be right down here, okay, in this gap there. Come on, you can get there. We go. So 25.52 through to 31.45. That there would be a typical wave 2 retracement. So if we have started a new bullish movement to the upside and we want to be, you know, really thinking fantastic, we're in a bull market and we want to be bullish on it, which I'm not confident on, by the way, guys, but if we're just going to play devil's advocate here and be bullish, then we'd have to look at this as a fantastic wave 1, and in which case a retracement would come down here. And you know, this would just be usually a 3-wave corrective structure, but it could equally be a WXYXZ if it needed to. But, you know, this would be the area that you kind of come down to, right? 25 to 31 cent, that range. And then you'd have this really fantastic bullish wave 3, wave 4, and wave 5, and then so forth, right? So in terms of retracements, though, you know, this is where we're going to be revisiting, if we're to be like super bullish about it. Now, the higher that wave 1 goes, the lower that our targeted range would also end up dropping. Bear that in mind as well. So that would be scenario number 1. If we're bullish on it, nice healthy retracement gets us back down to 25 to 31 cent, pretty comfortable area. And if we were to reflect on where the support levels are going to be found, you're going to find something at around 29.5, and you'll find a lot more support in and around the range of 26 and 27. Lose those, then you're talking 25, and that puts you right down into these low ranges again. Of course, you know, if we do not cross 44 cent on the high side, then that does put the Z wave in play as well, so we would be a little bit cautious around that. Internal count wise, though, I don't like this. If anything, I would say this is probably also just a corrective structure upwards, probably also ironically a zigzag pattern, so caution with it nonetheless. So in terms of ADA, though, I think there's going to be some fantastic retracement opportunities and some cool stuff to kind of be looking out for. Now let's jump over into our daily. Actually, yeah, let's go to the hourly for a second. I just want to spend a little bit of time here on the hour. And you can see that we're pulling down already, testing those lows on the stochastic. You can see it's coming down. The volume profiles are really low. I mean, they're just, yeah, just really low on the hourly chart. Like, I'll zoom out, and you can see we spiked up initially here, and then from there, just volumes are just not really behind it. When the RSI is, it's okay. Divergence indicators not really giving us too much on the hourly. Let's jump to the 4-hourly, zoom in just over here, check out those divergences on the 4-hourly. Nothing of concern there on divergence indicator. Stochastics in a reasonable position, volumes are still decreasing as we push up higher. That's nothing unusual. Let's jump over into the daily and throw in our divergences. We have our bearish divergence. That should be no surprise to anyone. You can see it right up here. Price is pushing up higher whilst we actually continue to lose momentum. So again, not positive. We're close to the daily 200 EMA. I imagine that's going to be where we've really found the heavy resistances. If we go and throw in our stochastic, you can see that it is heading into the oversold area. The volume profiles, of course, decreasing as we're pushing up higher, again indicating that reversal is due, and we're high on the RSI. Let's jump to the weekly. Our weekly has no kind of divergences on the RSI. That's good to see. The RSI is, if it will load, loading, there we go. It's okay, it's not too bad. Our volume profiles, they load that tiny, like volume decreasing week on week, not great there. And we're overbought on the stochastic, so we know that there's definitely going to be some limits being hit here when it comes to the price action of of ADA. Now, the biggest concern, I guess, on the weekly is going to be that we have lower highs here. And at the same time as that is occurring, we do have a higher high on the stochastic. So that would be our divergence right there. We are going up higher on our momentum indicator, yet our prices are decreasing. So you can kind of see how those two things are counter to each other. So yeah, for the most part though, I'm expecting retracements. 25 I think is a nice comfortable number to be targeting. I still think potentially even lower. But we'll see how the structures form as we kind of move to the downside on some of these. So I don't want to kind of alarm anyone too much, but I see some progression here with ADA to the downside. Got nice accumulation to occur if we are to think bullishness. But I think until we cross 44, my concerns will be that if we start going down in a 5-wave structure, 3 up, 5 more down, that we'll end up with that triple zigzag. The best thing to bear in mind here is it's the maximum number that you can have. You cannot go down any more in those zigzag patterns. So if we were to have the Z wave in play and we were to actually play out the Z wave, it would be the bottom of the structure. We couldn't go down lower under that structure without first having some nice movement to the upside, a big reset. And to be fair, that does look like what is going on here at the moment. This could be a nice big reset. And we would then have to kind of consider, and it would be a big consideration, is that this could be an A wave, that could be a B wave, and then you can do something crazy like that. Okay, now this is the kind of the big bearish scenario where we see that Bitcoin whales are not buying, and we can basically assume that until they start coming in here, we're going to be in a prolonged bear market. I mean, if that is the case, then you could well be looking at an ADA price way down there at like 15 cents, which would be an absolute freaking steal in my humble opinion. I'm going to leave this video right there though, guys. If you found it useful and informative, smash the like button. I appreciate that. If you're new, subscribe, tap the bell, select all the notifications, stay up to date with everything that we do. Join us down in Discord, keep your finger on the pulse of crypto, and I will catch you all in the next one.